During the past 2 weeks, my guests here on the Money Corner, both members of trading floors on the New York Stock Exchange and the New York Futures Exchange, have attempted to give you some picture of how we trade securities on a major exchange. Jim Noone, on my right, is a floor broker for Merrill Lynch on the floor of the New York Stock Exchange, and Dave Hill is a rising young capitalist who recently bought his own seat on the floor of the New York Futures Exchange. Jim, thinking of trading procedures, let's say that the average person comes to the Merrill Lynch office in Fort Lee, and he buys 100 shares of stock, and he buys 100 shares of stock that one of the stocks that you work with, and that's Kmart. Give us the procedure. What happens?
Well, okay, let's say the customer comes in, he'll talk to you, you'll put an order into your system here, it'll be sent to the floor of the stock exchange.
Yeah, my order says buy 100 Kmart at the market.
So the order will come into my area, I will take the order, I will go out to the post, I'll look up, see what the price is, and let's just say, for example, the stock is quoted 34.558. You want to buy 100 shares at the best possible price, but you have a market order, you want to buy it right now. With that sort of a quote, 5/8 for 100 sold, you just bought it 100 shares at 34 5/8. I've traded either with a specialist who is representing another broker, or I've traded with someone else, some other member on the floor for some other firm. There's no handshakes, there's no written contracts, there's just nothing, just that verbal exchange. I bought, he or the book has sold. I'll go back to the post, and as I'm going back, and as the trade is being consummated, there's an exchange recorder, they call themselves there, with an IBM type set of card, and he records the trade on a piece of paper, or on a card, rather, puts it in a computer right about there, and a few seconds to a moment later, depending on the activity in the exchange and the volume and the tape delay and what have you, that trade will appear throughout the world on the tapes you see in the various offices.
Which is like a flashing light, the kind you see in Times Square broadcasting the news.
Something like that. I don't know what. When I was in the field, they had the old paper tapes. Now it's everything was electronic, I guess. Anyhow, that will show that the trade has been done on the floor. I will go back to the booth, give the order to my the operator, who will type out the execution. It goes back to your office instantaneously. You know you have an execution. Might take 10 seconds, might take a few minutes, depends on how many other orders have to be done on the way out and back. Now, if you have a customer and he's sitting by your desk and he sees the trade go by on the tape, it's not always too smart to assume that that's his execution. I'm only one guy. There are many, many other people that might also want to buy this particular stock. So you may be out there and someone else might have been ahead of you or behind you. So a customer shouldn't really assume he's got anything until you tell him that you've got a confirmation from us that he has bought or sold that stock.
In terms of the electronics, let's assume that the report, you got an order from Paramus, and you got an order from San Francisco, and you got an order from Omaha.
Mm-hmm.
Is there a time difference?
Yes, each order is time-stamped as they come in. As they come in, and we will take the first one first in priority of time. All right? So you may have, say, 1,000 shares to buy from 2 of the offices. You may also have 1,000 shares to sell from one of the offices. With that type of a situation, you'd want to go out, and what we will probably do at Merrill Lynch anyhow is we'll try and cross that stock. We'll try and pair it off right there on the floor of the exchange, so we'll get a better price for both the sell side and the buy side. And this we do quite frequently. And oftentimes you'll have an order to maybe sell 1,000 shares, buy 200 shares. In that case, you'll go out, and let's suppose the best you can sell a stock for is, say, $25 a share. If you had to buy the stock, it would cost you 25 1/8. So you'll go out and you'll sell 8, and you'll put 2 more on. You'll sell 8 at 25. You'll cross 2 at 25. So in essence, you've sold 1,000 at 25, but your buyer for the 200 shares, he's skinned 1/8 of a point. He's only paid 25. Normally, if it was a single order, he'd have paid 1/8 more.
Jim, this whole procedure doesn't confuse you.
No.
You know exactly what you're doing.
Do it all day long.
Okay, we'll be back in just a moment. We're going to pause for a very brief announcement, and stay with us, please. Just by way of repetition, just by way of summary to get you back in the discussion out there in television land, Jim, you just got an order from Paramus. It was to buy 100. Shares of Kmart. And you went out, you bought it 35 1/2. You sent a report back to the Paramus office.
Right.
You've done your job.
Well, let me just interject one more thing, Phil. If the order is no good, let's say you have a limit order that's buy it at, say, $34 a share, and the stock's selling at 34 1/4. Now, obviously, you cannot buy it at that price right now. So we, at Merrill Lynch, and most other the big firms, will leave the order with the specialist, and this is one of his roles. He'll act as an agent for you. He'll record that order on his book, And when and if it goes down to 34 and it becomes executed, he in turn will execute it for us and send us a report, in which case you will get the report back to the customer.
So Jim, that enables a customer, the limit order enables a customer to put an order under the market if he wants to buy on weakness.
Mm-hmm.
And it enables him to put an order above the market if he wants to sell on strength.
That's right.
How long can those orders stay in force?
Indefinitely.
They can.
They'll either stay in force until they're canceled or they're executed.
Uh-huh.
Now, obviously, it behooves you if you have an order to sell a stock that's selling at 30 and has been selling there for 2 years, and you put an order in to sell it at 50. You know, it's
a little silly.
It's kind of silly.
A broker's not going to do it. A good
but
broker.
oftentimes, yes, that's your responsibility. If I get that order down there, I may challenge it, but it goes on the books until the challenge comes back and says, yes, I want it, or yet maybe you've made a mistake, you've written the price wrong or something like that. We pick up a lot of errors like that. We save the AEs a lot of headaches, because you'll scan an order. You'll know usually we'll know what the fellow means, whether he really wants to buy it or sell it, or there's been a mistake somewhere in the transmission or the taking of the order by the broker at the branch level, at the office level.
I've often found the personalities on the floor of the exchange fascinating, because you've got a lot of people down there who started as young kids, as clerks, very commonplace kinds of backgrounds,
right,
and have become very, very wealthy men.
Very wealthy.
Men of great influence.
I've seen many of them since I've been down here. Clerks, kids that start as an exchange runner, become a clerk for a specialist firm. They luck out. They come out from behind the post. They run a book. They're very successful trading, say, and they do very well. They have the limousines that you referred to in last week's program. Some of them.
It's still the story of America. The kid coming in.
It's one of the last places the kid coming in can probably do it. It helps to have grandfather there before you. In many cases, not so much with the brokerage firms like ourselves. We're agents of Merrill Lynch. We work for Merrill Lynch, and it doesn't make much difference. We're there to execute the orders, as are the commission brokers on the other big houses. But the specialist firms are independent franchises, and that's what you're referring to. A lot of them can and do make it big. And of course, you've got traders on the floor, like Dave is here. Only he's on the knife. We do have independent traders over there, which, like you know, are their own man and can make or break themselves.
Dave, do you visualize that you're going to have considerable amounts of capital at risk at any given time?
Hopefully, as an independent local, we don't have a lot of capital at risk at any given time. We're in or out, you know, dozens of times during the day, so that we never seem to have a position of any size for very long. At least that's what the usual scalpers do. The position traders are a little different. They'll take huge positions.
Do you have any idea how much money you expect you would make on a trade in order to satisfy you?
Well, the minimum tick is $25 per contract.
So if you make how much on a trade, are you happy with?
Well, it depends on your philosophy, whether or not you consider yourself a position trader or a scalper. The scalpers will generally trade for one tick. They'll take a position for one tick.
For $25.
$25, plus or minus. If it's against them, they'll get out of it.
What do you consider yourself, Dave?
I consider myself a scalper.
You consider yourself a scalper. Now, a scalper is a person who's in there for the one tick.
That's right. That's right.
And a position trader would be in there beyond one day?
Yeah, a position trader has an idea where he thinks the market may go over 1 day or 2 days or 3 hours or something, and he'll take a position hoping that happens. The scalper pretty much just makes the market.
I'm going to have to interrupt you. We've hit the end of our third week, our 3 sequences here, talking about trading on the floor of the New York Stock Exchange and trading on the floor of the New York Futures Exchange. I hope you've learned a little about trading procedures. It's an extraordinarily complex business, isn't it, Jim? After 10 years down there and 25 years in the business. I'm glad that you've been with us, and I hope you fellows will be back with me again here on the Money Corner. Thanks for being with me tonight. Good night, everybody.
Okay, Phil.